Hello, and welcome back to another episode of Darwin Investors. Today, we're going to be looking at GGPI stock. GGPI is the SPAC that's going to bring Polestar EV company public. SPACs are out of favor, so the stock is nice and cheap, or is it? We'll analyze that. We'll be analyzing it using their financials of the past year and what they project will be their financials going forward from their slide deck. We'll see whether or not it's a good deal, whether or not I bought any. So let's go ahead and let's dive into Polestar EV and see if it's a good deal or not. So as we said, GGPI is Gores Guggenheim, and they brought other companies public, such as Hostess, and they brought, Matterport public. And right now they're going to be bringing Polestar public. Polestar is it's an EV company, but different from, say, Rivian and Lucid, because they've already made a bunch of sales just last year, and they're ramping up production. In a sense, they're ahead of these other car manufacturers. They'd be closer to, say, a NIO or an XPeng or a Li Auto or something. Certainly closer to NIO. And the reason why is they formed this partnership with Volvo and Geely, and these companies are helping them along in their journey and making them come along a little bit faster. Now, I'd heard of Volvo, but I'd never heard of Geely. And so Geely, what they are is they're actually a Chinese auto manufacturer based out of Hangzhou, well, based out of China. And I think that's really important because, one, it's going to mean that this company is going to sell in China, and that's a very big EV market. And two, it means that a lot of the problems that other companies have getting parts or getting like lithium batteries or whatever, a lot of times these productions are stopped because they can't get one part or another. That I don't believe is going to be a problem for Polestar because of their Chinese affiliation. So that's a good thing. And the reason why I started looking into this was because I walked past a showroom in Manhattan the other day, and I looked through here, and here's a Polestar 1. I thought, well, it was like it made me stop and look through the window and say, what in the world is that, right? And so I walked around the front and I said, oh, it's a Polestar car. And so I was like, wow, I wonder if they're public. And there's a car sitting right there, so they exist. And so they had a Polestar 1, and over here we've got the Polestar 2. So we look through basically the fundamentals of Polestar, and we see that it's got a very nice valuation. This is what Seeking Alpha is finding, a very attractive valuation compared to rival EV players, and really that includes all of them, up and down the board, up to and including Tesla, really. And Polestar expects to deliver 20,000 units for 2021. So they've already sold or delivered 20,000 units in 2021. So I went off to Car Gurus to see, if I could buy one. It turns out you can. And it looks like the Polestar 2 is selling for about $58,000. Like I showed you, it's a really nice looking car. It's a reasonable price. The Lucid's coming in at what, about 160,000 or something. And so this is going to be a Model 3 competitor. So it gets in the miles, because it's about 340 miles to a charge, which is also comparable to the Model 3. The Polestar 1 would be kind of like where Lucid is trying to get to with their Lucid Dream Edition. It sells for a lot more money, 161,000, but they didn't sell that many of them, or they didn't make that many of them. This is just kind of one to kind of get their production going, get it out the door. But you see, it's an awesome car. Awesome looking car, but it's a very expensive car, 150,000, well, this was for 144, this one's for 161. But the important thing is that you can buy them today. So they delivered 20,000 units. They're using the Volvo and Geely sites, and they're expecting they can, if they needed to, based on these partnerships, ramp up production to 750,000 units per year. Tesla has over 1 million, Lucid will have 53,000, and Rivian has 150,000. And so, and it says right here, Polestar has the benefit of accessing the technology, experience, and infrastructure of Volvo and Geely. This should allow the company to avoid production and quality control issues that plagued Tesla during its early production ramp-up stage. I would say that it's also plagued Lucid, because remember, Lucid was supposed to come out a while ago. Fisker was supposed to deliver the Ocean. All these things constantly get delayed for one reason or another, and I'm guessing it has something to do with production and quality control issues. That's the reason why they keep on backing this up. So if you look at the Polestar and its facilities, they have one facility in Chengdu and one owned by Geely and operated by Volvo. And they can provide up to 750,000. If you compare it to Tesla, Tesla has 6 manufacturing facilities, over 1 million. Lucid has 2 production facilities, one in New York and Chicago. I thought it was in Arizona, but and again, they're planning to expand using the $350 million worth of expansion. Rivian has one in Normal, Illinois, with a capacity of 150,000. If you look at the volume, Polestar has already pumped out 29,000 units in 2021, and they're estimating that they're going to have 290,000 units in 2025, as opposed to Lucid's 17,000 reservation and 135,000 units estimated sales in 2025. And then, of course, Rivian's kind of like really more of a concept than a car company at the moment, it seems. Their trucks have been backed up again. We'll see when they come out. I've got a spreadsheet that goes through all of these revenues and future estimates and what the future value of Polestar will be. We'll go over my spreadsheet in detail, up to and including what the eventual price per earnings ratio will be in 2025, or at least according to their slide deck, what it should be in 2025. And so right here is, let me go ahead and pull up their investor presentation. So here's their investor presentation. And what they expect is, through the partnership here with Geely and Volvo, is that they've got the Polestar 1, which they made very few of. Polestar 2 is kind of the bread and butter. It's the affordable, Model 3 competitor, the one that basically launched Tesla. They've quickly gotten that one out, and that's the Polestar 2, price 50 to 60,000. We already saw that. Polestar 3 is the one that they expect to come out in 2022, and it's going to be a luxury SUV, and it's going to sell in the same price range, they believe, as a Porsche Cayenne. And they haven't really shown it yet. I think if you're like a big person, you can go check it out. I know it exists, but they don't have a picture of it here. The Polestar 4 is going to be the sport version of it, and they're comparing it to the Macan. So I'm guessing it's going to be a smaller version to the 3 and going to be sportier, right? And then the Polestar 5, I'm guessing, luxury sport GT 4-doors is going to be it's going to be the revved up version of the Polestar 1, and they're comparing that to the Porsche Panamera in price. So it's going to be pretty pricey. That's why I think it's going to be more like a Polestar 1. And it's going to be coming out in 2024. Here's some shots of the interior of the Polestar. You can see it looks, it looks nice. It's streamlined. It's stripped down. It's got a nice big screen, nice seats. Let me skip down here. There's deliveries. There's a better delivery chart. I'll show you that. We've got the partnership with Volvo and Geely. So here's a bigger version of right here, this little deal. And what they're showing is that that they produce 750 cars of the Polestar 1 per year. So it's a low production. That was in Chengdu. And then they really stepped things up for this Polestar 2, 180,000 cars in Lukai, and it's a potential site in Ghent for 280,000 cars per year. The Polestar 3, their SUV, is going to be produced in Charleston and Chengdu, and they're supposed to get 300,000 cars. This is the capacity. They can get up to 300,000. They're not going to make that many, but they can potentially get that many out of those factories. And then the Polestar 4 will be 240, and the Polestar 5 is 30,000 premium EVs. Again, it's going to be on the smaller side because it's going to be It's going to be like the Polestar 1. It's going to be a really up. They don't probably expect to sell too many of these relative to the 2 and the 3 and the 4. Their distribution, you can see it's their distribution is North America. It's like Iceland, Europe, Saudi, China, Southeast Asia, Australia, New Zealand, North Pole. I don't know where that is, but you can see it's being expanded all over the world. So that's another advantage. So it's not just North American sales. I mean, these things are selling everywhere. And you look at it right now, the current markets for Polestar are, United States, Britain, Canada, Germany, Sweden, Switzerland, Norway, China, was that Netherlands, Belgium. And then they're planning expansion to like Finland, 3 countries whose flags I don't know what they are, but they say they're in Europe and I trust them. And then expansion into Asia, Australia, New Zealand, South Korea, and other places. So you see they're expanding in a hurry. So I believe, and they've already got a track record for pumping out vehicles that you can buy right now. So I have no reason to not believe that this is not happening. So their plan is right here. This was the chart I was talking about, as I get to later, is that they made 29,000 deliveries last year of the Polestar 2. And then in 2022, they're expecting 65,000 deliveries of the Polestar 2. The beginning in 2023, they're expecting 94,000 of the Polestar 2, 24,000 of the Polestar 3, and 6,000 of the Polestar 4. And eventually, 104,000 Polestar 2, 67,000 Polestar 3, 43,000 Polestar 4, and then 11,000 of Polestar 5, and so on, until finally they've ramped up to their 290,000, which was illustrated on that sheet. And here's more revenue stuff, but I've got it on a spreadsheet that's much simpler to see than that. So they came public, or they're coming public via the SPAC, and the SPAC price was $10 a share. They have 2.125.3 billion, it's 2.12 billion shares, right? 2,125,300,000 shares. They have $1.253 billion cash on their sheet, right? So they're not in debt. They actually have money, at least through this. So they have a market cap then of $21.253 billion and an enterprise value of $20 billion. Enterprise value being the market cap plus their debt minus their cash on hand. So they would be market cap plus debt 0 minus cash on hand 1.253 billion, gives you an enterprise value of $20 billion. The ownership, Gores Guggenheim is going to hang on to part of this as part of their deal for bringing them public. Some PIPE investors are going to have 1.2% of the shares, and Gores Guggenheim shareholders, the people that own GGPI, will own 3.8% of the company. This is where they go on to compare it to other car manufacturers. They say that compared to NIO and XPeng and Lucid and Tesla, it's a good, attractive deal at the moment. And based on my numbers on my spreadsheet that I'll show you, I have to agree. And again, these are all on my spreadsheet. And the spreadsheet that I keep talking about, it's based on the numbers right here off of their own appendix and from their presentation. And it goes off of how many vehicles they expect to deliver, what their total revenue is going to be, growth, their EBITDA. They expect them to go EBITDA positive in 2023. They expect to be a profitable company next year. They expect to be net income profit in 2024. So this is where they'll start to develop a price to earnings ratio. And we'll see what their price to earnings ratio will be in 2025 if all goes according to plan. Again, that's all broken down on my spreadsheet, which I'll show at the end to determine whether or not GGPI is a good value now and whether it's something that I've gotten into. So this company or this article here is saying that GGPI is worth 20% more based on Polestar's excellent outlook, and that would get you a price of what, about 13, 14 bucks. You'll see from my numbers, it's better than that. Actually, it's better than 10 to 20%. It says and possibly much more, and I'll show you why they say and possibly much more, because if you go straight off their slide deck, it's worth a whole lot more. So they're talking about the SPAC merger. They talk about the stock trades at $11.95. It doesn't currently, it's currently at $11.70. And they talk about the market cap and it being 25.4. It's a little bit less than that. So they go on to value, but they want to compare it with NIO stock. And so this is where it's interesting here. So the NIO comparison is that NIO has a market value of 57.5 billion. In addition, based on its latest balance sheet, the cash is 4.1, given an EV of 53.445 billion, meaning NIO market cap minus its cash on hand will get you an enterprise value. And so they're saying, given that the analyst forecast the 2023's sales will hit 14.52 billion by 2023, its EV sales metric is 3.68 times. They're saying that GGPI at $11.90, their metric EV to sales in 2023 is 3.6 times, and NIO's is 3.68, demonstrating that they believe that NIO is a little bit more expensive than GGPI right now today. And they're comparing again to NIO because NIO is actually manufacturing cars and sending them out the door and selling them. They're both in kind of similar stages. NIO's a little bit further ahead, but not a lot further ahead. And so they're saying what to do with GGPI stock. They're saying that the merger probably won't close until sometime in early to mid 2022, and then this is going to give the market plenty of time to scrub the details of the merger. If for example, before the deal closes, it is likely we'll find out how many sales and deliveries Polestar made in 2021. This to me is really important because we have a chance to actually see how this company is performing. It's not some hypothetical. It's not some pie in the sky. Let's see if they can do it. We'll be looking at what they have done, not what we think they can do. Or we can project out what we think they can do based on what they have already accomplished. So that's important. So that's what they're saying here. We can then compare that with the projected performance from the slide deck and see if the company is on track. In addition, hopefully GGPI Polestar will provide sales and adjusted EBITDA financials. When they become public, of course, we'll go to Polestar's investor relations and we can see exactly, we lift the whole curtain on the operation. And then we can use that information to value the stock more closely. So however, Polestar has one thing on side. It is already in production. It is not actually a startup operation. And this is what I find so attractive about Polestar. And they said that means it deserves at least 10 to 20% higher valuation than it presently has now. And I would argue more, but again, we need to see how things are shaken out for them. That implies that GGPI should be trading at $13.15 to $14.34. So let's go ahead and look at the financials here. So here's a little spreadsheet that I come up with, and it's in 2021, Polestar's revenue was $1.59 billion. Its price to sales, based on the current share price of $11.70, is 15.639. Its EBITDA it lost $700 million last year. So its EV to EBITDA is a fictitious number. Its net income lost 1.07 billion last year. So its PE ratio is nothing, and its growth, according to their sheet, was NA because it's their first real year of ramping up operations. I mean, prior to this year, they had the Polestar 1, but that was just kind of like, they were kicking the tires and kind of sending stuff out the door, try to sell a little bit, generate a little bit of cash, right? And I would argue probably even a prototype to the Polestar 5. So in 2022, next year coming up, this is what they project. They project that they're going to have $3.17 billion in revenue. They're going to have a price of sales then of 7.8 times. So they're going to be trading at 7.8 times sales. Their EBITDA they're gonna go from losing 700 million to losing 430 million, and their net income, they're going to go from losing 1.07 billion to 670 billion. And this is really important. We want to make sure that they're narrowing their losses, because if they go from losing 1.07 billion last year to next year they lose 1.2 billion, this stock price is going to go right through the floor, right? Because they're going to say, well, maybe these guys are going to go bankrupt, right? And so it's not a good look. So that's something really close to keep an eye on. Because they're not yet positive, their price per share and their PE ratio is 0, but their growth expected to grow at 99%. In 2023, remember, this is the year they're going to be releasing the Polestar 3. They're expecting their revenue to go up to 6.69 billion, price to sales of 3.7. This is what that article was saying when they were comparing 2023 price to sales to NIO's price to sales today, or in 2023. They were saying that NIO would have price to sales then of slightly higher than the 3.7. The revenue, this is the first year they're expecting to be profitable. And they said they're going to generate $340 million in profit that year, giving it an EV to EBITDA ratio of 69.45. The net income, they're expected to lose a whole lot less this year. Now, this is pretty key. Again, these guys cutting these losses is very key. We want to keep a close eye on that. And then their price per share is still non-existent, as is their PE, but their growth is growing at a really rapid rate. And then 2024, remember, that's the year they're going to come out with their Macan-like vehicle, the Polestar 4. And they're expecting that by that year, they'll be generating $13.25 billion in sales. Remember, NIO was doing 14.5, was expected in 2023. So they're a little lagging NIO, but they were expecting to do 13.25 billion in 2024. And their price to sales ratio at that point is be 1.87. And their revenue that they're going to generate is 1.16 billion. So their EV to EBITDA would be 20.35, which is a fair value, I think. Their net income is going to be 610 million. So they're expecting to go net profitable. That's what makes this so important right here, because this is a big deal. If this happens, their stock's going to blow up. And they're going to generate 28 cents a share, and their PE ratio is going to be 41 based on the $11.70 price of the share today. And in 2025, we're expecting this is off of their slide deck, they're expecting $17.78 billion in sales, 1.39 price to sales, $2.14 billion in revenue, an EV EBITDA of 11. Net income is going to be $1.56 billion, so they're doubling up again because of that 98% growth. And they're generating at this time 73 cents a share, giving them a PE ratio of 15.94. So that's at a current sale price of 11.70. Now, for somebody growing like this, they should probably have a share price closer to that of XPeng, Li, or NIO, right? Probably in the $20 to $30 range. I would think is kind of a fair value for these guys. So I put over here NIO. Their revenue last year was 2.5 billion. Their price to sales was 20.43, and I chose Fisker this time. Their revenue is nothing, and their price to sales is NA. And so you can see that Polestar actually, to me, it's fairly valued right where it is. You may want to wait and see if they're able to actually come through on some of their promises or their deliveries. You know, it's one thing to make them, it's another thing to get someone to buy them. Now, I saw the cars, I really like the cars. Do I own the stock? Yeah, I bought a bunch of it because I saw I walked past that dealership, and it made me stop and look and say, hey, what kind of car is that? And so it is a head turner. And let's face it, the shares are $11.70, and so they're pretty cheap. I kind of expect this stock. I mean, Fisker's trading at what, $16? I expect this stock to get up around 20. Now, where would be a good spot to actually come into this to get a position in GGPI? Well, I got into it on Friday, and I got into it, and this is very unusual. Usually when I buy something, that's your time to go, that's your green light to go and short the stock, right? But I actually got into it at session lows and immediately went up. So I'm already positive quite a bit on this stock. So if we look at, let's say 1 month, it looks like a good spot to get in is right around the $11 and gosh, maybe $11.30 range. You probably may or may not get back down to 11.06 again. I seriously doubt, unless there's some really bad news, it's going to get back down to 10 bucks. But you might be able to catch it right here about 11.30. That might be a good spot to grab it. It just seems to have a floor of about 11.30. So that might be a good entry point for you. But yeah, that's my plan for GGPI and Polestar. If you got anything out of this video, yeah, please like and subscribe, and then leave me a comment if you have a problem with any of my numbers. And have a good day.